This is the end game of DeFi.
Welcome to X6IM podcast, where we dive into the cutting-edge ideas on decentralization, blockchain, and the new monetary systems. In this exclusive episode, Ankit sat down with Mike from EtherFi. EtherFi initially launched as a non-custodial pooled staking provider on Ethereum to ensure users never relinquish control of staked assets.
So when you stake, you need their permission to get your ETH back. There really wasn't a way to build a non-custodial staking solution.
But today's Mike's bold vision is to evolve EtherFi into the crypto-native alternative to traditional banking, a true NeoBank.
Crypto-native alternative to banking. So the goal is to give you a self-custodial solution that lets you do all the things that you would normally do with your traditional bank.
Though EtherFi has got over $10 billion in total value locked, Mike still believes in the core principle of crypto.
The whole purpose of crypto is to be able to have custody and sovereignty over your assets.
Supported by Casper Finance, the first V3 DeFi protocol on Casper. Igra Labs, atomic programmability on a Casper block DAG.
Today, I'm here with Mike from EtherFi. Good to have you on, Mike.
Yeah, great to be here. Thanks for having me.
Awesome. Mike, I've personally been a fan of EtherFi, which I think I mentioned before the recording, since the early days, actually, in 2023. Given your focus on the non-custodial staking, I know you've become more of a sort of neo-DeFi, neo-bank. But, for today's session, I do want to focus on non-custodial staking part, and then we'll evolve more into the sort of the version 2 of EtherFi. So let me start by asking, how do you define EtherFi to someone who's never heard of it, who's brand new to it?
Yeah, so today I would describe it as a crypto-native alternative to banking. So the goal is to give you a self-custodial solution that lets you do all the things that you would normally do with your traditional bank, including having the equivalent of a savings account, the ability to invest your assets in DeFi, the ability to borrow against them and spend them in real life, including on and off ramp, payment rails, everything that you'd normally need from a traditional financial institution, but in a fully self-custodial way. One of the things that powers that, analogous to the way T-bills or bonds, short-term bonds, power savings accounts and give you some small amount of interest. In the same way, our staking product, which was our first product, powers the core interest rate offering that supports your savings in your account.
Right. So this is, I love the analogy, actually. I don't think a lot of people in crypto use that analogy because I think crypto has been more of like the siloed approach, but I do like it, the way you put it. And just for our viewers who are new to this is really all powered by Ethereum.
Correct. We do. Our base is certainly Ethereum, but we have expanded cross-chain. We now have a couple of hyperliquid products, for example. We are shortly, hopefully, launching a Solana integration. So we're sort of, supporting a wide range of networks, but our base and our core is Ethereum. I strongly believe Ethereum is the most decentralized, safest place to build, I guess, for the long term.
Can I ask, why did you start EtherFi in first place? Like, was it something, were you building on Ethereum before this and you saw an opportunity? Because I think when you guys started this, Lido was already there, right?
Yeah, we didn't see our goal is to create a better version of Lido. Like that was really just a stepping stone. The reason I started EtherFi is the same reason I got into crypto in the first place, which is I really believe in the values. When I first read the Bitcoin white paper, I got very excited about it because here was the potential of a truly stateless currency, money supply that couldn't be corrupted. And in many ways, EtherFi is an extension of that. It is a financial system, financial platform that can't be corrupted. It lets you fully, control and hold custody of your assets in a way that can't be expropriated. And that's a product that I personally want to use. It's a product that I want to exist. So that's really the motivation. Honestly, is it's kind of a selfish desire to just I want this product. I need this product to exist, and the best way to build it is to build it for others.
So what do you think wasn't done properly on the Lido side?
I mean, so I'll say things have changed with Ethereum since when we started, which actually makes some of the issues that that I thought Lido had less of an issue now. So Ethereum has actually fixed itself. There were a couple of issues that we were looking to address specifically with the staking product. One, I thought there was a significant risk vector on validator keys. So when you stake into Lido or with any node operator, you're giving them, or they are generating the validator key that controls the ability to then get for you to get your ETH back. So you need their permission to get your ETH back. That was a point that was kind of subtle, and a lot of people didn't appreciate that. That's how Ethereum worked. As you generate these keys, you delegate your ETH, but you can't get your ETH back unless they choose to give it to you. And so therefore, there really wasn't a way to build a non-custodial staking solution. So we came up with a different structure that in such a way that the node operators did not generate the key. You as a user held the keys. Now that's not a problem anymore because Ethereum has now introduced what's called execution layer based exits, which means even if you don't have the key, if you have the withdrawal credentials, you're able to force exit the validator, and so you now can get your ETH back. So that's just less of a problem now. I mean, there's been a couple other improvements. And in addition, I thought restaking was going to be pretty significant, a big force in the the staking space, which I think it will. It'll just probably take some time to develop. And so those are the elements that made me feel that staking was the first foundational product that made sense for us to build on this journey to build a crypto native neobank.
So the plan was always to get to this place. Were you actually doing something in the banking past? Like, are you coming from banking?
Personally, no, not at all. No, I had no background in finance at all. I mean, I did run just prior to EtherFi, I ran a hedge fund, a crypto hedge fund. But again, that was not something I didn't go to school for that. It's just sort of a self-taught thing.
That's very cool. Crypto hedge fund. And how long you ran it for?
I think it was about a year. It was just about a year. And then I realized I didn't actually want to run a fund. I think I had a different impression of what that was like. So instead shifted gears and focused on, and actually building a product.
I see. So if it was before 2023, right, it would have been this year of Luna, year of FTX 2022. I think we saw a little bit of turbulence in the market.
That's right. Yeah. I mean, thankfully we managed to not get impacted by Luna. We weren't really impacted by FTX either. So thankfully that wasn't a problem for us. But obviously it impacted our returns. There was it was just the market kind of like all of it went down. We didn't lose any money, but it was just a bad time for everybody.
But just coming back to EtherFi, right? So Lido was early on in the restaking. They started even before Ethereum merged, right? They were running on the Beacon chain, I believe. So I guess the question I wanted to ask you, did people care about non-custodial restaking when you guys were getting started? Was it a thing?
I mean, I think people care about, permissionless staking. Right. I mean, restaking is just... just an element of staking. I view it as just a kind of a layer on top. But staking is. I think there's definitely a community of Ethereum users that very much care about it being non-custodial. You have a very loyal fan base, for example, for projects like Rocket Pool and and other projects that are, very focused on decentralization. I mean, I was concerned about, well, just my own ETH. I wanted to. The whole purpose of crypto is, to be able to have, custody and sovereignty over your assets. And so, yeah. So for me, staking was that was a big risk factor.
So yeah, people did care. And when you were getting started, also like this is again 2022. You guys were just established in 2023. And Ethereum actually dropped to what, $850 or something, right? At that time,
Wasn't that low? Yeah. Well,
yeah, it was crazy actually. It was, I think, and then it stayed around 1,600. Upper bound would be 1,600 for a very long time. How, as an entrepreneur yourself, how did you like feel at that time building on Ethereum ecosystem while it's a little bit shaky, I guess, from outside?
I mean, it's my focus has always been kind of stay heads down. In some ways, when the price is low, that's an opportunity to focus on building and consolidating, I guess, your position. And so, yeah, I took it as that. I took it as an opportunity to be able to build while everyone else was having a hard time. I mean, in some ways, I think the post FTX blow up was less bad than there was a period of time, I don't even remember exactly when it was, but like it was when Solana was just full force campaign against Ethereum. There was a huge amount of FUD, and I guess some of it I suppose was justified, of like people being angry at the Ethereum Foundation for not doing enough to combat it. And so then, I mean, honestly, every meeting I had, every external meeting, people would ask me like, you're called EtherFi. Like, man, do you think being associated with Ethereum is like holding you back?
Yeah.
There was almost a year of that. So that was actually much worse than the period of time, right after FTX. And my answer at that time to everybody, it was the same as it was in the beginning, the same as it was today, which is, look, I don't know what other, smart contract platform you'd build on, right? It's legitimately Ethereum is the only one that actually offers a credibly decentralized platform. You're building on Solana. I mean, you're basically at the behest of the Solana Foundation and leadership there. It's a very top down kind of ecosystem. Price, whatever the price is. I mean, I'm in crypto because I actually think the principles and values are important. So it never really occurred to me that there was another option.
Yeah. So it didn't really impact you as much. You were just head down, build.
Well, for sure. No, it was hard, but like that's what we did, is just stay heads down and focus on building.
Yeah, I think Ethereum, what Ethereum has done on smart contracts and really changing finance, I don't think any other, I guess, chain has been able to replicate that. So just let's move forward to today, right? I was looking at some numbers. I was looking at some numbers earlier. EtherFi is sitting around on around 2.72 million Ethereum, right? Which equates to around $10 billion that's staked through EtherFi. These are huge numbers. Did you guys expect to hit these numbers within 2.5 years since the inception?
No, yeah, it grew a lot faster than I thought it would. I think even our most optimistic projections, we ended up growing a lot faster. And generally, honestly, things ended up going much more smoothly than we expected. I mean, we had, as I mentioned, this very early, the vision was to build this, crypto native banking alternative. Like it just worked out, right? Like usually you have this idea and this multi-stage plan, and it usually doesn't survive contact with reality. But it's worked out pretty much as as well or better than we'd hoped.
To put things in perspective, it's still around 8% of the total ETH staked, right? So it's around that number. Out of 35 million.
I haven't checked. I don't know what the amount of ETH staked is. That sounds about right. but I haven't. I honestly haven't been checking that too much.
Yeah, I'm sure you have other priorities.
There's what, 30 million ETH staked or so? Is that right?
35, I think that's the number.
35. Okay. Yeah, so that sounds right. Yeah.
Yeah.
I mean, at some point, if we get too big, we did make a commitment to self-limit because we don't want to represent too large a part of the network. But I think we're pretty far from that, so I'm not that worried about it.
Is it because of the centralization risk that you're sort of preemptively thinking that? Yeah,
for sure. Yeah, I mean, you don't want to get anywhere close to 33%, right? So probably at like 20%, we'd start, kind of self-limiting. But again, we're ways off from that.
Yeah. But Lido will be close to it, right? Lido is, I think, is around 20.
They were much closer to it before, right? They were right around 33%, I think. I do think the whole restaking movement ended up kind of reducing that concentration a little bit.
Yeah. I think they're sitting around 24-25%. But the part perhaps that I wanted to get more into is, even if you look at today, roughly around 30-35% of Ethereum staked that's happening is happening through centralized exchanges across the board, right? From Coinbase, Binance, Kraken, you name it, right? So why do you think people are not jumping after seeing FTX, after seeing, all the things we've seen across other exchanges, shenanigans that happen? Why do you think people are not jumping onto a non-custodial service like EtherFi?
Well, I think there's probably a number of reasons. One, I think people don't perceive the risk even after FTX. I mean, look, how many banks need to blow up before people start being distrustful of banks, right? I just think, I don't know, people keep going back to it because it's kind of the path of least resistance. But like part of our goal is to make it so easy that that they will be able to use more decentralized self-custodial services. That's that's our goal. So I think that will that eventually will happen. And I guess to some extent, people are. I do think I think the percentage of ETH on exchanges has declined, if I'm not mistaken. I think there's much more ETH in DeFi, on chain.
Technically, you would think there's more ETH that's actually staked because of the rewards that they're getting, right? And they're now obviously pooled approaches, right? If it was, if people had to run their own nodes, I can understand that. But now with obviously pooled approaches like Lido, Rocket Pool yourself, people can deposit and obviously earn rewards, but they're still not choosing to do it, right? Only 1/3 is actually still opting in for staking.
Well, I think a lot of ETH, there's probably a bunch of reasons. One, I think most people just don't, maybe they're not even aware of it, or they don't see it as much of a missed opportunity. Yeah, like if someone is gambling on the price of ETH, or Bitcoin or whatever, like, are they really, like, do you really care about 3% yield? Like, you're hoping it's going to double and triple, right? Like I think that's where a lot of people's heads are at. So I think that's one part of the reason. Some people, including some of the, ETH OGs, they still view staking as risky. They don't want to, again, they don't view the 3% as a big opportunity cost. They don't want to stake. They just want to hold their ETH and, keep it simple. And then a lot of ETH is in institutional hands where they just, from a legal standpoint, they don't have the ability to stake. I think there's an argument to be had, like, is it good for there to be that much ETH staked? Like, you need 30, 40, 50% of the ETH staked. A lot of people would argue that you don't. You actually want, like, the minimum amount that's sufficient to secure the network, and then you don't really want, any more beyond that.
Yeah. And I think the point here, perhaps, I think the one you mentioned is, I haven't really thought about it. All the Ethereum that's actually locked up under ETFs, they wouldn't
exactly. That would be an example where they're not really able to stake it.
Yeah. Wasn't there a staked Ethereum ETF approved maybe a couple of months ago.
Yeah, I'm far from an expert here. I think the ETFs are able to do some staking, but it's limited. It's limited to a percentage of their holdings because they need to be able to provide liquidity. When it's asked, and so the result is they need to they can't stake everything basically.
I guess just carrying on the theme, why do you think people don't run their own nodes, right? I mean, that's one of the big things in crypto.
Well, because it's a specialized skill. And of course, yeah, I mean, it's like, I don't know what an analogy would be. Like, why don't people that, hold dollars, run their own, like trade bonds, right? I don't know, like that's not even the right analogy, but it's just it's a lot of specialized knowledge. Like not even 1/10 of people who use Ethereum realistically, are capable of or want to be running nodes, and you don't really want that. It's good. I mean, I think there's plenty of people who are willing to run, home staking nodes, and that's great. And that's actually something we've encouraged. And we want to actually support more of that. But it's just not. I don't think that's appropriate for most people.
Yeah, I guess in Bitcoin communities, and I guess even other sort of proof of work, they sort of push behind, hey, run your own nodes, make sure. But I think yes, as you said, right? Perhaps a lot of people don't know, but also it might be it's just expensive, right? Like you have to have 32 ETH minimum, right? Plus, not everyone would have that.
Correct. Yeah, that's. I mean, that makes it certainly harder. Yeah.
Harder. Plus, you have to have obviously now, hardware. You have to run it all the time. It's just harder on different levels. It's not just about not having enough Ethereum. It's just even if I have Ethereum, I don't want to get another computer to run the node.
Well, and the bandwidth requirements are still pretty significant for Ethereum. Yeah. I mean, you need a very beefy connection to make it work.
Yeah. That's cool. And I guess I'm still trying to understand like why a lot of people not jumping straight onto EtherFi, right? Why the market share is around 7-8%. Perhaps it might change. Have you seen like incremental increase over the years?
Relative to other liquid staking platforms, yes, we continue to grow. Relative to total amount of ETH staked, I mean, we've obviously over like a 2-year period, it's been a huge growth. But over the last like 6 months or so, there's been so much ETH that's now gone into like these DATs and ETFs and all that stuff, and so we're now starting to get some of that. Like for example, the ETHZilla DET, digital asset treasury company, allocated a lot of their ETH to EtherFi. The SBET, SharpLink, which is the second largest one, recently said they're allocating a bunch to EtherFi. There was another one and awesome. A few more in progress. So those are other sources of ETH that we're looking to get.
We haven't touched upon restaking. Perhaps define restaking for people that are new to it, because I think non-Ethereum users have never even heard of this concept.
Yeah, for sure. Yeah, so restaking is a concept that there's different ways you can talk about it, but the basic idea is that staking is you take some of your ETH, you allocate it to a special smart contract, you put in a special smart contract on Ethereum, and that gives you the right to run a node on the Ethereum network. It gives you the right to run part of Ethereum. That's what staking is. In exchange for running part of Ethereum, you get some staking rewards, which, depending on the day, it's like 2 to 3%, yield on your ETH. It's a variable amount depending on network activity. So that's staking. Now the reason it's called staking is because you are putting your ETH at stake. In that, if you run part of the Ethereum network and you do something bad, like being offline or double signing or things like that, you get punished and your ETH gets slashed. So you actually potentially could lose your ETH if you do things that are malicious. So that's the concept of staking. Now, empirically, it's quite low risk. I mean, you have to actually try really hard to get slashed. You really have to be doing something malicious. I mean, even if you're incompetent, you're generally not going to get slashed. So it's low risk, and you're getting a yield. So one thing that one might do is say, well, I don't want to tie up all this capital and get this, relatively low yield. What if I want to play a bit further out on the risk curve and enroll that ETH to provide shared security for other crypto economic networks? So could be other blockchains, could be almost like an insurance, various kinds of insurance for other protocols and projects. Could be supporting AI agents and keeping them decentralized. So any number of things. And so that's the concept of restaking. Is basically it's like you're staking your ETH and then you're restaking it to provide economic security to other networks, and in exchange you're getting some additional rewards. Now this is obviously it's a novel concept, and it's been it's in the process of being developed, and so now there are a few of these platforms that are actually launching on these restaking platforms, and so it's really cool, and we've been obviously a big supporter of that, working closely with our partners Eigenlayer as well as Symbiotic and others that are doing restaking.
Yeah, and you guys have been doing amazing rewards, right? So by staking Ethereum, you can get rewards on Eigenlayer and Symbiotic. I think you've done those ones in the past, right? So that's great. What are the use cases you're seeing now?
There are AVSs, as they're called, which is these restaking networks that are up and running. We're delegating to many of them. Obviously, EigenDA is a big one, and there's another one called Cap that's actually generating revenue now. That's up and running. Yeah.
Cool. Awesome. All right. Thank you for explaining, Mike. That was great. Now, if I could actually, I'd love to quickly move our sort of chat to a different direction, which is more focus on the version 2. I don't know if it's version 2. I'm just calling it version 2 of EtherFi, which is, the vision of you becoming a DeFi NeoBank, which is fascinating and exciting and perhaps new for a lot of people. So could you please explain what is a DeFi NeoBank? I think people might understand NeoBank, but how does a DeFi NeoBank work?
Yeah. So the basic idea, I guess I kind of touched on it earlier. The basic idea is to have a self-custodial alternative to traditional banking. So what you typically get from a traditional bank is the equivalent of let's say a savings account where you can keep your money. You have a service typically attached to the bank that lets you invest your money. So you can put it into stocks or bonds or whatever else to earn some sort of return. And then you also have the ability to borrow. So you can borrow, for your car, for a mortgage, for day-to-day spending, have a credit card. That's loosely like what a bank does for you. Obviously, banks do many more things, but that's loosely what they do for a typical consumer. And today, the tools and the crypto ecosystem is mature enough where you can now offer all of these services in a self-custodial platform, basically a crypto neobank or a crypto native alternative to traditional banking. And that really has been the vision for EtherFi, from day one, is offering this kind of service. And so we now have hundreds of thousands of users that are on this platform that are using EtherFi, that have their assets with EtherFi or within the platform, that deploy them on chain, that use the credit card, and it's it works great. I think in countries like Brazil and Taiwan, where we're seeing a lot of user adoption, we see that this this has the really great product market fit.
Yeah. I think I've seen the card. I haven't used the card. I love to actually use it. So basically what you're saying is you're blending the core liquid staking part of, with the crypto native banking feature, right? if I got that part right. The features such as cards, spending, savings, all the sort of things that are happening, but you're combining those two things together, right? Within this non-custodial sort of asset management style, all built on blockchain. That's sort of how I got that part, right? The DeFi part, because I think neobank people get it, but the DeFi neobank was perhaps I heard the first time at I think on your Twitter.
Yeah, that's right. It's a novel concept. I mean, when we first started talking about it, this was back in 2023. It's part of our Series A pitch deck. I honestly think people heard the words coming out of my mouth. I don't think like it connected to reality. Like I don't think they understood that maybe I wasn't doing a good job pitching it. It was just like it was an alien thing, because even today, crypto is very, very Ponzi coded, where just everything is viewed from the lens of, okay, you're saying some stuff, but really, okay, what is, how's your token going to pump? Like, how are you going to get exit liquidity? Like that's the entire universe of investors and speculators and even builders in the space. Just everything is just wired that way. Everything like 98% of projects in crypto are just casinos, with like extra steps. Just even the stablecoin projects, some of the largest ones, it's just farming the casino or like a built-in, speculative elements. So just being in crypto and actually saying, no, we're just going to build a product. People are going to use it. They're going to pay us money to use it because it's a good product, and that's how we're going to grow. Is just people like at a very surface level might acknowledge like, yeah, okay, I get that, but they just that's just not part of their reality, their framework. So so yeah, like that's why I think a lot of people like they almost filtered it out. They don't remember that we've been talking about this concept forever, but it's starting to mature. There's a bit of like a crypto neobank meta now. It's been on a bunch of podcasts. There's people like doing lists and whatever. I think the market is like slowly starting to realize that this is a big deal. In many ways, look, I view this as the end game of DeFi. Like this is it. This is what like what if I put aside the Ponzi casino stuff, like what's the point of decentralized finance? Well, it's to give you like the same kind of consumer finance applications that you and love, but that are much better. So this is it. This is what we're building towards. So I think this is going to be a multi-billion-dollar market very quickly in terms of revenue. And we'll be growing very, very fast because there's just product market fit there.
Yeah. I've seen some numbers, very healthy numbers on I think some people put out some data out there. But yeah, I wanted to say, I think the other part which I truly saw in 2023, 2022, 2023 was Ethena. I think they proved something very unique also, that this, there is true yields and you can sort of, hedge on both sides and create a product, obviously, which they did with the stablecoin. Very fascinating. I think these are the true, innovations that happened around that time, right? Within Ethereum.
Yeah, for sure. I mean, Athena's in some ways, it's such a foundational kind of thing.
Yes, I know what you mean.
The speculative premium, like the speculative premium of crypto, the sort of gambling nature of it manifests itself in these, perpetual futures in the form of a funding rate. Yeah. And so Athena just sort of vacuums that up. And so it's like just absorbing like all of this, like it's the perfect vacuum for absorbing this the speculative premium of crypto. So that's why I think it found such great product market fit, and it's grown so successfully.
And I think the way I see Athena is it's more like it removed for themselves, for the stablecoin, remove the volatility, which is the thing in crypto. Like what it did is actually use the volatility to remove volatility for the coin, right? Stable coin, which they created off the back of it, right? I mean, that's how I see it, by capturing two sides of the volatility and packaging under their stable coin. I guess that's how I see it.
Yeah. And well, I mean, the basis trade, as it's called, has been a hedge fund strategy for, as long as it's been possible to have futures on crypto. So, and it's something that people were doing for, with a very large size. They're still doing very large size. And so Athena packaged that up and made it available to everybody. So I think that, I think everybody, maybe except for Athena themselves, I think they had big ambitions, like was surprised, man, that's like, there's a lot of demand for that. Like there's a lot of demand for that, that product.
Yeah. Yeah. So just, I guess, carrying on this NeoBank, DeFi NeoBank. So you've got two products, right? So EtherFi Cash and EtherFi Liquid. So these are the two products you guys launch. So what are these products? Where can people go to, sort of how can they start to use it if they were to use it?
Yeah, the best way to think of it, honestly, is not even as separate products. Obviously, yeah, you can go to EtherFi and stake. You can go to EtherFi and deploy in these liquid vaults and earn, DeFi rewards. But like the best way to use EtherFi is as an integrated platform. And so the way you do that is you can download the app on your phone, on your iPhone, set up an account, and then deposit with fiat, deposit with crypto, stake, get ETH, deploy into these strategies, get a credit card, spend day to day. Just use it the way you might use your bank, but understanding that it's self custodial.
And card, do you? It's a digital card, right? You don't actually physically send the card, so there's no such thing as physical.
We do have some physical cards. We've been having issues with our supplier, and so it's just been taking longer for us to meet the demand of physical cards. But yeah, no, we do have physical cards.
Beautiful.
We've shipped a few thousand of them. But yeah, we're going to be shipping out, a lot more hopefully soon.
Oh, awesome. So you're limited by the physical manufacturing of the card, not by the demand side.
It's probably a combination of things, but yeah, like to get a physical card made, there's 3 separate entities that have to be involved. Someone has to make the card, someone has to customize it, meaning put the number and name on it, and then someone else has to package it and ship it. So like each of these is a separate company, and if there's ever a breakdown in that supply chain, it creates issues. So we had just frankly ended up getting some bad suppliers in that process, and so we've been kind of stuck trying to sort that out.
But soon people will be able to get the physical card, right? I think
yeah, for sure. I mean, it's I've been saying it's like a week away for a couple months now, but yeah, we're working really hard. Many people want the physical card. It's just like there's lots of places you need a physical card. So yeah, it's frustrating. We're trying to get it out as quickly as possible.
Mike, I want to do a wrap-up question here. So I think, perhaps what I wanted to ask you here before I let you go is, do you see in the future that the traditional banks will be getting into this DeFi neobank business?
I think the neobanks are going to get into it, which I guess you could think of them as traditional banks. So I think the neobanks are going to get into it, significantly. But I don't know. I think it's going to be a long time before Wells Fargo and Chase starts offering DeFi products. I don't know that they're ever going to, do self custody. I think that
no,
that's just a completely, that's too big a departure from their business model.
Yeah, but you do see Revolt or Wise, like these type of businesses, getting into DeFi.
Well, they're already doing it. Yeah, for sure. I mean, obviously they're already offering crypto. Just holding it and purchasing it. They're starting to offer a little bit of DeFi products, like Coinbase now offers Morpho, I think, for lending and borrowing against your Bitcoin. And I see others, following suit. It just makes sense. It's just a good product.